Hello again. I wanted to give you a little overview of my last. This is my all-time trading, but I've been trading with this software only for, let's say, a maximum of 5 days in total. Like spend 5 days where I monitor the prices, throughout the day, and I wanted to go through a couple of trades which I've had and describe what has happened. And like here, the A and B was a really good position. It took me 4 hours to get 11%. It was like $5. I was really happy for that. And most of these trades I make buying between support and resistance levels. And I don't use stop loss in my trading because this stop loss was a lifted stop loss, so basically it doesn't count as a stop loss. It was I manually set up higher the stop loss. And you can see the most of these trades which are closed right here, the now price is minus 8.28%. So I sold when the price was higher, and now it's minus 8.28%. So and overall, what I wanted to tell about this software online, the trader.ai coin is it's giving nice results. You can see in 5 minutes 1%, 8 minutes 0.4%, although 17 hours 2%, 22 minutes 1.28%, 30 minutes 0.30%. You see these trade times they're not large, they're not big. 31 minutes, 3 hours, 16 minutes, 25 minutes, pretty. So what I'm doing, I'm actually buying when the price is a little bit lower. So this trade with FET, it was done overnight. I placed a trade at support level, buy lower, and I just set up to use a 2% stop loss strategy, which is available on this website for free. So I used that strategy, and overnight the market supported and bounced back to 5.53%, which was $11. So it got me, like, I woke up and was like, oh, yeah, that's great. Of course, there are markets that fall down because there's a chance for the price to go up and go down. But on support levels, the chance is a little bit greater than the falling down price. And I took FED because I saw that to the next resistance line there is a wider gap. So I definitely then tried to use 2% fixed target right here. So it's 2% stop loss strategy. And for others, I use 1% stop loss strategy. For some, I use 0.5% strategy. It's because of the how I see the resistance line, how high is it, so then I balance my risk by using sell faster strategy. And and then I will go and show you a couple of trades, how I do in trading. But uh, you know, I have these two are only the negative trades which I manually closed down because I thought the settle will go down, and it went down. Then I bought it back a little bit cheaper, but still these are only two negative trades that I was having for the last 5 days. And so yeah, and Sky, I bought Sky. It went up to 40%. I manually sold some part of it, like $9 worth of Sky, but still. Uh, all right, so let's just look at last 48 hours where I was trading instant in it, not 48, 96 hours, where I was trading rapidly, like do trades, do trades, do trades. I made 53 trades, no negative trades, and I don't deal with big amounts of money. I'm still testing the software and training myself to do trader. And one thing I did notice was that, let's go to the charts. I have coupled open deals which are negative, but I don't do stop loss trading just because I know the market will fly back. It's a bull market right now, and I do believe the market will fly back. So that's why I don't use stop loss because the market will recover. and talking about Searle, which I'm trading lately, it's uptrending, 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 and right now he's in a position of a support level, which basically would mean the market is in a buy. It's in a buy position. You can see the trend line. So the market right now is in buy position, and I definitely bought some Searle at that point. But how this is a 4 hour, and I don't trade on 4 hours, but using the 4 hours can identify you at 5 minute charts using the trend lines. You can see where the market will bounce back, and right here we have a you can see a negative trend. I will show you like it's not precise, but you got oh sorry you got the idea. So here you can see a negative trend. So where would I have a buy position at this point? Buy position I would have right here at exactly 18. So basically what you can tell right now at this moment is how high the market can go from that bounce. It's 3%. So I will use to reduce the risk because not always the market will bounce back. So basically if you were to buy it here, you were to calculate sorry if you were to buy it here, you were to calculate a 5% bounce, but the market didn't go up to those 5%. It went up to this area, sorry, to it went up to this area, which is approximately 2.2%. So buying at this range would be, you know, the things that I never do anymore is never buy at highs and never buy the resistance areas, because you would see that hey, there could be a breakout happening quite soon, yeah, but still never buy at resistance area. That's my rule number one. So where would I buy it is at 0.18. So I will show you how you can buy at 0.18. Well, first of all, I set as a buy lower 0.1805, just to be a little bit higher. And this will be a simulation trade, and I'll use a trading strategy of 1% fixed targets, which basically means this is a stop loss strategy for 1%. Although the AI supports three different default trading stop loss strategies that they make, but I made my own. I just feel more comfortable. But they say that these AI are back tested. So anyway, I use my own because I feel more comfortable with my own idea how I trade. So what happens now? The trade will be placed, and sorry, and what you're about to see right now is there is a chance for the market to break out and go to the 0.19 at this somewhere here. There is of course a chance for the market to fall down, but if the market falls down, there is a chance for the market to bounce back at at the support level. So buying it right now would be a 50-50 odd of rebounds of for the market to go higher. Buying it lower, there could be a higher chance of a rebound. So buying it right now would give you the odds of 50-50 turn like 1 or 2%. Buying it at the support level would give you a little greater chance of a pullback, only because the market is supporting. Only that's why. So the support will increase your chances. The resistance reduces your chances. Support will increase your chances. So the overall conclusion, what I want to tell you is that even if and when you buy at support levels, you have another 50% chance that the price will break out. So in overall, telling and thinking is that buying at support levels is the only strategy I use. So, and another thing is when I'm following these kind of trades is that I don't look at indicators. Indicators just mess up. Indicators just mess up. Indicators just mess up my head. And I always use probability. And the things that when I was only a beginner in the trading, things that I learned is the things that now have changed for me is that at the beginning I used to look at trades like, oh my god, the prices are about to go up. The prices are about to go up. Should I buy? Should I buy? Should I buy? And when prices fall down, I'm like, oh my god, the prices will fall down even more. Should I sell? Should I sell? Should I sell? And just a couple of days ago, I still was like this. That oh my god, the prices. Oh, it moved up a little bit. Now it moved up. It's about to break out. It's about to break out. Or maybe I should buy. Or should I buy it right now? Or should I buy it right now? And I'm at this moment right now. It doesn't matter. It doesn't matter because at this point, it seems so the prices have break above the resistance level, which basically indicates a breakout. That's fine. I have holding coins already. Uh, if it breaks down to the support level, okay, then I will buy. So no worries, no struggles, whatever. But what I will definitely do, I would buy the support level right here. So at this case, to me seems that the market has breaked out uh, for to go and test the first resistance levels at 1880 and 1920 right here. So this would be the test, but still, to me, to buy right now is a big no-no. Is a big no-no. So what I would do is I would wait the price to resist at 1920 and I will buy it at 1880 because I will have then a greater chance of a rebound because 1818 here is this at this moment this support level which will be if it breaks out above the 1880 and I would use definitely a couple buy lower positions right here. I would definitely place them. So no reaction to this small breakout which is happening right now. Complete no reaction, and just be chilled and patient uh, for the trading. So I took watch some people online that follow some indicators and do some indicator analysis on the trading. But to me, when going through the trading information what the website has and my own personal experience is that indicators do not matter. They all are a probability of 50-50. If you do several thousands of trades, there are a probability of 50-50. So trending on using indicators on daily charts in a year will give you a maximum of 13 to 20 buy signals. But if you were to make and compare it with all markets, that's what I did, back tested it through all the markets. It showed me that all indicators are just a probability of 50-50 and randomized out. When you make 1,000 trades on following a certain indicator, you will get 50-50. So in terms how I see exchange, it's the same as flipping coin. If you buy it at this position, there's a 50-50 chance. But what you as a strategical trader can do is you follow the odds that at support level there is a little greater odds, and you divide those odds and you divide or manage that probability with seeing what's the height that it can go, seeing as the possibility for it. For example, if there are more than one supports there. For example, right here there's a right here when we zoomed in, there's a 5 minute support and a 4 hour support trend line, right? Trend line, this one. So um, you just use the probability theory. If something falls down lower, you buy it because it has a greater chance of falling of rising back up. But if you buy it when it's hyped, you have a greater chance for it to fall down. So that's how you manage the risk, and that's how you manage the probability outcome. So I see that this is the only way how to deal with exchanges, with the markets. I know that many do not understand what I'm talking about or believe this because indicators are seemingly true. They look seemingly true, but in the long periods, they're just a waste of time. And the only thing is that what I see work is this website's trailing stop loss strategy, is risk management and trending line strategies, and target managing targets. And as I said, now when it's a bull market, I don't use stop losses, and at bear market, I would only trade on day charts, never on small charts. But still, that's my opinion. I don't know how you manage your own risks. So what I see potential of this coin right now is doubled right here. So that's why I'm trading this market, because it has a high potential. So and the, and just because it has a high potential, um, I think it's more safer to trade in such markets. So let's get back to Bitcoin. So as we talked a little bit moments ago, it was 650. Now it's 7,650. Now it's 7,685. So a 0.5% rise already. And on Bitcoin, maybe the prices are going up and down for smaller volatility. But with Bitcoin, it's a little more indicator. It's a little more technical analysis, like following patterns, than other coins. But although those are small percents, but you can trade with larger amounts of volume, with larger volumes inside this market. So Bitcoin will go to 850. So 2-3% from this moment. So at leverage markets, there's a nice chance, but I don't do leverage market trading, so still. Okay, anyway, thank you for watching this video, and subscribe for daily updates and daily videos, and write questions about what do I think about other markets and stuff like this. And I would be happy to share, so bye.